Before I continue discussing the markets, please take this moment now with helping me and subscribe to my YouTube channel. Click subscribe. Click this bell. Click all. This helps you receive a notification when I post my next videos. Next, click the thumbs up button every time you watch my videos. Okay, let's continue with the view of the markets. Hello, welcome to another video of Winning Wall Street's Money. Going to discuss currencies and yields, interest rates, and bonds. We'll start off with looking at the higher time frame, the monthly time frame. So we're looking here at 6 grids. Each of them is a monthly time frame. The top 3 going left to right are the yields, the 30-year, the 10-year, the 5-year. And the bottom going left to right, we're looking at the 30-year bond, the 10-year note, and the 5-year note. So over the last 5 years, past 5 years of the 30-year yield, the low is here, which is this year, and the high was 2018. From 2018 to now, 2020, it was trending lower. We made that low. We're in a consolidation phase now, and the trending is back up. So you could call it a bounce or reverse. But this consolidation phase, we're trending to the upside of it, and we're forming inside candle for the month. It's not done yet, but an inside candle means the high and low is not above or below the prior candle. And a break above that, one could consider the inverse happens with bonds that break down. So that trade idea be potentially going short on these bonds, 30-year bonds. Also, if we break out of this prior candle to the upside, that puts more pressure on interest rates to be raised. So just remember this when we go down to the faster time frame, what's happening from the higher time frame. Looking at the 5-year, looking at the 10-year here, we're in a consolidation phase as well. And Ben, the low of the last 5 years was this year. The high was 2 years ago. So it's doing similar. And then looking at the 5-year consolidation inside candle. But again, these consolidations in the past, the breakouts have been down to the downside. So it's been during a staircase pattern, lower low, the 10, the 30, the 10, and the 5. But now it looks like the momentum is changing. So either build more consolidation or break out of these consolidations to the upside. On the 30-year bond, been big hard sell-offs. So the inverse is declining. It's also inside candle. So then that solid body is red. So break below that green one is a trade idea. And look at here, the 10-year consolidation. It looks like more distribution. So we see here, we're not making higher highs. We're trading below that high. And we're trading way below the high of here, where the 5-year is consolidation. So the big picture I'm just trying to point out here is, it looks like there's a shift of smart money. And it looks like the fears of fixed income and the bonds may go higher. Interest rates would be the higher yields. Do you understand? If these yields go higher, typically interest rates follow higher, and these bonds would have higher rates. Let's go look at the US dollar and cryptocurrency Bitcoin. To the left, the monthly chart is Bitcoin, the past 5 years. Here's the all-time high, where the all-time low for the past 5 years was also there. So we're just shy of the all-time high of the past 5 years. Where the US dollar, look at that, broke below that consolidation, trending down. The all-time high past 5 years was there, 2017. and the low was 2018. So the trend is downward. The weaker dollar, the inverse typically happens with the yields. Let's go look at currencies now. The bigger currencies, the pairs against the US dollar. So we're looking here in the futures market. All these currencies are against the US dollar. The top heavy weighted averages in the US dollar index is the euro, followed by the yen, followed by the pound. So again, we're looking here at monthly charts. The past 5 years, the low was 2017 and the high was 2018 for the euro against the dollar. Well, now for the year, we just broke out this consolidation. The euro is trending higher. That's weakening the US dollar against the euro. Japanese yen, the high for the past 5 years was there, and the low was there. Look at that. We're trending higher. So that's weaker US dollar. British pound, the third heavy weighted currency of the US dollar. The high was 2016, and the low was this year. And we have a consolidation here heading towards the swing high. At the end of this month, starting next year, United Kingdom should be totally done leaving the EU, and the strength and bias more likely in the pound getting stronger against the yen. Canadian dollar, past 5 years, there's a high, there's a low. Strong trend to the upside this year. Look at that consolidation phase. We broke out of it, we're trending higher. Huge trend. For some of these are more consolidation pairs. Swiss franc, also this month, broke out of a consolidation, broke out of a swing high, trending higher. And the Australian dollar, V-shaped pattern, broke out of this consolidation, trending higher. Point out here also, the 3 safe haven currencies the real goes to is 1, the US dollar. Well, they're not going to that one right now because it's declining. The other 2 are the Japanese yen and Swiss franc. So safe haven, people have fear, they go into those 3 currencies, but they're not going to the US dollar. So where are they going? The yen and the Swiss franc. And they are trading stronger against the US dollar. So let's look at those top 3 pairs that trade against the US dollar. The euro, the yen, and the pound. So we look down here on these 3 bottom grids. Look at the euro yen. Again, those are 2 of the 3 strongest currencies in US dollar, but which one is stronger against each other? Well, again, the euro is in a consolidation trending higher, so that's giving strength to the euro against the yen. But it's way off its highs for the past 5 years, between the high and the lows. Where the euro pound, where I'm biased, I'm expecting more strength in the pound against the euro. So the high the past 5 years was there for the euro pound, and the low was there. So one would expect, if I'm bearish, I'm looking for this to trade lower, that would give straight to the pound. So that's the trade idea, if you have the same perspective. Again, if you think the pound is going to gain strength against the euro, then this would decline. That's what we want to happen. Yep. So we'll see what happens shortly in the days and weeks ahead. And the British pound against the Japanese yen. There's the high for the past 5 years, and there's a low. But since the momentum has been more to the downside, it's giving strength to the yen against the pound. That's a sign of safe haven. They're going to a safe haven currency. So the pound against the yen still has a dominant side, the bias side, versus the euro and the yen. We're seeing the euro gain strength against the yen, and the euro pound right there in acceleration. Let's go down to the faster time frame, the weekly. First, looking here at the 30-year yields. This is a 1-year time frame. Each of these grids is 1 year, and each candle is a weekly. But you see again the shift. This is a staircase pattern higher high in the 30-year yields. Same with the bonds. You have the inverse because bonds trade inverse. You're having staircase pattern lower low. So this puts pressure on raising the interest rates. Maybe you didn't see it as clear in the monthly time frame, but I see it here. There's a shift going on this year. Let's look at the 10-year. It's also staircase pattern higher high and a 10-year yield, where the 10-year note is much more of a consolidation phase. Let's look at the 5-year yield. Better just see here, much more of a consolidation. And same with the 5-year note in the bond market, much more of consolidation. So I see a clearer view in the 10 and 30 year, but the momentum's to the upside. Doesn't mean the interest rate's going to necessarily be raised, but also doesn't mean to expect the interest rates go any lower, where we know Congress and the White House is discussing creating more currency to spend more money without raising taxes to pay for that. That's putting pressure on the US dollar, putting pressure on the US dollar to get weaker, a weaker US dollar, because we're increasing our deficit. And we lower interest rates, you can create more deficit, but it doesn't look like the interest rate's going to go lower. So if interest rates don't go lower and they're weakening the dollar, create more currency, well, how are you going to pay for these? If the interest rates go higher, then you have to pay more on the deficit. Do you raise more taxes? How do you do that? What would the decision in the new administration be, or the divided Congress? Let's go down to the pairs of the currencies. Actually, let's look at the weekly of the dollar and the Bitcoin. Okay, this is the weekly. Here we go, Bitcoin for the year, all-time highs for the month. For the current period, whereas the US dollar broke below a swing low, trending down, very weak again. Typically, when you change the interest rates like that, it weakens the dollar. But again, they haven't been lowering the interest rates. So what's the other thing that brings the weakness of the dollar is printing more currency. You have two things that could weaken the US dollar: lowering the interest rates and printing more money. So all I foresee here is that this is going to continue going lower, the dollar. Let's look at the major currencies against the US dollar on the weekly. So on the weekly, again, wow. So this past week, look at that. The euro broke out of consolidation, giving strength to the euro against the US dollar. Japanese yen, it's in a consolidation. British pound, it's trending higher. Took out that swing high here. And see this yellow horizontal line, that's another swing high. Canadian dollar, all-time high for the year against the US dollar. It's trending higher, staircase pattern higher. Swiss franc, safe haven currency. It's all-time high for the year, broke out of consolidation. And Australian dollar, all-time high for the year, broke out of consolidation. Again, that's reflecting the weakness of the US dollar. That means US products are going to cost more money because all commodities are also priced in US dollar. Let's finish off here looking at the major currencies with one another, again on the weekly time frame. So on the weekly time frame, right there, the euro yen. The euro yen broke out of consolidation, giving strength to the euro, running up to this consolidation. The euro pound, it reversed off this bottom, giving strength to the euro, but it's back inside this consolidation. So it might be an opportunity to go short again. We'll see what happens in the days ahead. And the British pound, the Japanese yen, trending higher off this consolidation, giving strength to the British pound. A lot to be aware of this month. I mentioned there's a lot of things going on. The US Congress has to make decisions with the White House on spending, as well as United Kingdom separating from the EU. And the pictures being shown here in the currency, what's going on. If you like this market information I've shared and want to learn more with greater detail, step-by-step training, I have a Patreon page. I share trade ideas for earning monthly income. Below in the description box, click Show More. Scroll down. This link here, click on it. Take you here to my Patreon page. Select the membership and join. Then you have access to unlock my posts.